on. Hello, hello, hello. It's Stephanie here, and welcome to this episode of the Rent Success Podcast. This episode you're going to love because it's all about buying property, and this is something we love to talk about. We have with us today Sam Norris, the property investors broker, and there's a good reason why he's called that. Sam runs Grand Union Finance, the best specialist broker in the UK, and he wants to change the old school mortgage advisory so that it's more up to date, flexible, and works for us as property investors. So welcome to the show, Sam Norris. Great to have you with us.
Thank you so much, Stephanie. And you know what? I just love watching you do that with your hand movements and all that kind of stuff. If you're listening to the audio, you've got to go and watch it on YouTube because just watching Stephanie, perform that opening is well worth it. And hopefully we'll try and keep that level, as high as we can for the rest of the show.
I think it will be, definitely. So if you want to see the recording, it's also on the website, and it's going to be rentsuccess.com/159. If you want to see how good Sam Norris looks today, then that's to be.
With my call center headset on.
Exactly. But very cool. It's more of a secret agent headset, I would say.
I'll take that. I will take that.
So Sam Norris, everyone's in the papers are worried about the property market. They're saying that property investors are selling up and all of that. So what's the score?
Do you know the score is it's never as bad as the papers make out. Let's be completely honest. Like, have we not learned our lesson yet? We've known for years and years and years the papers are they're gonna take anything they can and blow it out of proportion and sensationalize it. So no, things aren't as bad as they seem. Do you know what? The big thing, and I know this is my thing, this is finance, but everyone's comparing this recession as we're going into it now to the last recession, but there is no comparison. There is no comparison because the big problem that we had back then was that we couldn't fund our purchases because there was no money, because it was the credit crunch. There was no credit available. And everyone talks about supply and demand as being the big instigator to our property market being the way that it is. But why do we have demand? We have demand because people are able to borrow money to buy property. If we had a market where everyone had to use cash, there would be very few buyers around, and we'd be back in the feudal system when about 17 people own property in the UK. And that's where we came from. And the advent of finance being available to us is what drove us to have the property market that we have today. So the good news for everyone that's listening is that there is loads of money around. There is over £1 trillion worth of available liquid funds in the UK market to be lent out in bridging, in mortgages, etc., etc. So that is the good news. The bad news, of course, is that rates aren't as good as they were not so long ago. And that is putting a lot of people off. But as investors, we should be kind of embracing that a little bit and saying, well, that's good, because if there's less buyers in the market, people struggling to sell, surely that means that there's going to be more deals around. So I think the property market as a whole is struggling a little bit because less residential buyers make up like 60% plus of the market. And if they're struggling to get mortgages, that is obviously going to have a bit of a negative impact. But for investors, it's great news because there's going to be more stock available, less competition. And yes, interest rates are a bit higher, but loads more people are being pumped into the rental market, which is pushing rental rates up. So, hopefully that will cancel each other out. So for me, we're going into 2023. It's got to be one of the best opportunities to be a property investor. Well, certainly during my career. And I started just before the credit crunch. So I'm very optimistic. I think there's loads to be smiling about as a property investor right now.
Well, I love the way that you set that out and that framework, and just thinking about that, going back to the feudal system where you needed to be able to buy cash, and most people were not in a position to do that. And I suppose that's still the case now. If you needed to buy all your additional buy-to-let properties in cash, for most people are not liquid in that way. So we are being given this incredible opportunity to be property investors because we live at this time that we have this access to credit, that we have access to business, even access to business before you think about buying property, because we have the opportunity to be able to start these rent to rent and property management businesses to make money. And we also have the opportunity to access cash to be able to buy property. So I love that you said that. And the other thing you said was that rates, mortgage rates, that is, are not as good as they have been. Well, that's because they were incredible, weren't they? They were just unbelievably low.
Yeah.
And now they're just, well, what's the new normal? And it's still easy to buy property at the new rates and make money. So give us a little picture of the rates for buying a single buy-to-let and mortgage, HMO. And I know that they will vary quite a lot, but if you could just sort of paint a picture for us of how things have changed.
Yeah. So, I mean, if we go back 6 months, if we were doing buy-to-let mortgages for personally owned properties, and rates had a 2 at the beginning of them. If it was limited company, there might be high 2s, maybe have a 3 at the beginning of them. And then for HMOs, you might have a 3 or a 4 at the beginning. Mm-hmm. Now everything's just shifted up a gear. Now we're talking personally owned buy-to-lets. Probably if it starts with a 4, you're doing okay. Limited company, if it starts with a 5, you're doing okay. And HMO, late 5s, sometimes going into the 6s. The most recent application that we've done today was for an HMO, a refinance of an HMO, and that was at 6.69%. But I should use a precursor here. The reason that was as high as it was because we were using a lender that would allow us to do a commercial yield-based valuation of a C4 classified property. So that's the reason we could have got one that was nearly 1% cheaper. But there was a reason for that. So you've got to look at the bigger picture with this kind of stuff. I find that, I've been working with property investors for quite a long time now. So I have been really privileged that I can actually see some of the best property investors in this country at work. And one of the things that I see is the difference between some of the best and some of the, also around the investors is their ability to see past an interest rate, not just look at it and go, I'm not going to buy this property because I can't get a 3% interest rate. It's all about the cash flow. It's all about the bigger picture. It's the long-term, aspect of this investment. Property is not a short-term gain. It's a long-term, investment. And, if it's all about just making sure that, it's washing its face, it's making you a profit. And there's a long-term strategy that's part of it. Can you recycle cash if you're doing BRR or a conversion or something like that? There's more at play than just simply, a percentage point. And I think the best investors are able to see through that.
Yeah, the percentage point has to work in the wider picture. So exactly what you said. And the thing is, you don't even have to wait, do you? You don't even have to wait for that return, because does the cash flow work on that deal at 3%, 4%, 5%, whatever it is? Does the cash flow work? And then on top of that, the likelihood is that in 10 years, 20 years, whatever, the value will have gone up. And especially if you're doing stuff to it, when we're buying blocks of flats and doing them up, the value of the properties goes up in line with the rental yield, and that just boosts the capital appreciation so much. So it's really, I'm not going to say you can't lose, but it's really challenging to lose money in that scenario.
Yeah, I think you're right. But you say you can't lose. I think you can't lose obviously there's always going to be an aspect of the market can trip you up. But let's say that there isn't that aspect. What I find is the variable, and this is so I often talk about this when I'm talking about bridging finance, because a lot of people struggle with the concept of bridging finance. It's too expensive, it's too risky, all this kind of stuff. And I often say this story to people, which I think explains this point quite well. I say, right, you've got the same type of deal. It's like the same sort of, maybe it's a BRR or an HMO conversion, or, maybe someone's buying a block of flats, converting it into, they're splitting the titles, whatever it might be. And then you've got the bridging loan, and then you've got the end scenario. What happens? Now, if you've got the same lender, the same type of property, but a different end scenario, what's the variable in that? The variable in that is the investor. So if you are a good investor and you work your numbers and you know that it makes sense and everything stacks up, then you will have success at the end. If you don't do that, then you won't. Don't blame the bridging lender. Don't blame the market. Don't blame the property. it's the investor that's the variable. When I say that, it makes me sound like a horrible person. But what I'm doing is saying I'm prepping newer investors to make sure they take responsibility and actually do the hard graft, because we were saying off air, weren't we? This property game, it's hard graft. If it was easy, everyone would be doing it, and it isn't easy. And it's why we get all these people that are so jealous of landlords and start telling everyone that they're the devil's work when they're not. They're just jealous of the fact that they've made a success of things. But yeah, it's hard work. You've got to work your numbers. You've got to understand what's going on, and if you do that, you've got a much greater chance of being successful than if you try and take shortcuts and things like that.
Yeah, and there's so much. It's so forgiving. Property. You just said something about bridging lending, which I would have been when I first got to know about property and started in property. I was very suspicious of this bridging lending and thought it was only for the very risk-oriented investors who maybe had tons of experience as well. But when we tried to get the finance for the first property we bought in business, it was a commercial property. The only finance that we could get was a kind of bridging finance. It wasn't your typical bridge. It was actually a 3-year, so it was a short-term product. And the reason was we didn't have any commercial property experience. We'd never owned a commercial property before. We'd never done a commercial conversion before, which was what our plan was for that building. So that was the only lender and who would look. And it actually worked out really well, because what happened was we were able to then secure that property. The rate was, I cannot remember it because you probably asked me what it was off the top of my head, but it was an affordable rate. The property paid for itself because it was a commercial property. It had a commercial tenant in. So the tenant was paying the mortgage and was paying all the bills because they were on a full repairing and insuring lease. And after we got the planning and we mutually agreed to get vacant possession, the tenant was happy to move on over lockdown. And then we did the development. Bloody nightmare. Anyway, we did the development for self-contained flats. And then we refinanced that onto a normal mortgage. So going through that process, then we wouldn't be able to have that asset if we hadn't taken out that bridging loan.
Yeah, and I think that is actually so key. I like to keep things simple. I'm not the cleverest person in the world, so keeping things simple is very, very important for me. If it's a case of do or don't, and if you don't do it, then you don't increase your cash flow, you don't improve your property portfolio, you don't take a step in the right direction. If you do, then you have all of those things. The only thing you've got to get over is the fact that that scenario is not right for using a mortgage. I get a lot of people say to me, I'd prefer to use a mortgage on this particular deal. And I say, well, that's great. I'd love a gold-plated toilet seat, but it's not going to happen because you just physically can't have a mortgage. Like, of course, like as a broker, if a mortgage is the right thing to do, why am I going to recommend the bridging loan to you? Like, I just wouldn't. I don't know. Look, I can't speak for all brokers, and I know that I'm sure there's some skeptics out there that would say that there's some brokers out there that would be pushing on this kind of stuff because there's potentially better reward for them and all that kind of stuff. But my job is not to try and make a quick buck out of clients. That is not my job. It's not my company's job. My company's job, and I said this recently, I was at an event, I was asked to speak at an event, I was sitting on a panel, and somebody said, is the reason that we should use your brokerage over another because you'll get us the best products for our circumstance? I said, no. And they were really shocked. And they said, what do you mean? I said, like, if you go to a broker and don't expect them to get you the best product suitable for you, that's like going to McDonald's and being shocked that a Big Mac's on the menu. Like, every broker should have the base level ability to recommend to you the best solution to your problem. And if a broker isn't doing that, then they're not good enough, unfortunately. And that's the harsh truth. All these brokers out there that have a go at me when I say this kind of stuff, sorry guys, it's the harsh truth. do you know what I said to this lady? I said, my job is to make you successful, is to give you the foundation to be successful. Choosing the right product for you is part of that whole setup. A good broker should be looking at the bigger picture for you, helping you plan in advance, understanding your strategies, having the right people in the process that we are trying to build at Grand Union in order to facilitate you having an easy ride buying your properties, having a relatively easy ride refinancing them, and helping you navigate the pitfalls, enabling you to, recommending the best solicitors and accountants and architects and all these sorts of people, adding, genuine value to what you do, and, helping you with templates and all this kind of other stuff, essentially taking on the role as like a project manager, for what you do. And for me, that's the reason why somebody should choose me over somebody else. It's not because I will be better or worse at telling you what product to take out. It's that hopefully the whole experience around that would be better. And that's what I'm trying to get at. And that's what I'm really passionate about in my industry, because I think as an industry, I think we could all do a lot better. And I think there are some brokers out there that are still letting the side down. And I'll get off my soapbox now. But that's where, you can tell I get impassioned about this. I really want, to help my clients, and I want them to be the absolute best that they can be. Sometimes that's to my own detriment, but I still would prefer that to be the case than go after somebody just for a quick buck. So going full circle on what I said, it's whatever the product is, the right product. If it's a bridge, it's a bridge. If it's development finance, it's development finance. It's not always the ideal in your head as to what you would prefer, but the right way is the right way, and that's the reason why you'd go for one type of product over another.
And I think what we're also buying as property investors when we choose a broker is your relationships. Because you might speak to me as a property investor and then speak to another property investor. We're both looking to do the same type of transaction, but my experience is different to that of the other property investor. So you might think, okay, for you, Steph, this lender is going to be the best, and for this other person, that other lender is going to be the best, because each lender has got their own criteria, and what those are. The people who are going to be looking at it, and you're able to bring that expertise to bear on the situation, because as you said, it's not just choosing the projects, it's going through that whole journey, which, let's face it, with lenders changing the rules and changing the rates and changing all sorts of things during the process, can sometimes be very challenging.
Massively. I think just to take you on that second point to start with, and then I'll come back around to what you were saying previously. The thing that I say to my team the most is, don't forget, guys, we are working with people that are in stressful situations. We're working in tough times. We are the middle men or women, and as a result, we were going to get battered from both sides a little bit. And I think what hopefully does make a good brokerage is for us to be like instead of us being a brick wall in between the two, it's actually to be like a nice soft bit of foam. And what we do is we absorb the negativity from the lender and we repackage that in a really positive way to our client, and vice versa. If a client's getting angry, we act as a barrier, a soft, nice barrier to the lender as well, because both those relationships are really important. That comes back onto your point at the beginning. At the moment, I'm having a bit of a tough time with a lender, with a bridging lender that I've been using for a long time. And, I think we're in a situation where the client hasn't necessarily helped themselves. Let's just say that. But I don't think the lenders sort of, showering themselves in glory either. And if the two of them were in a room together, my God, there would be an explosion. We have to sit in the middle there and try and get the best out of both sides. And it is really difficult. And when we're in a market, like you say at the moment, where lenders are pulling rates and they're changing criteria and they're making life a little bit more difficult, it's those times where we need to learn, as people in this industry, to take a deep breath a little bit more often, not necessarily have these knee-jerk reactions. The amount of times, I've seen something that a lender's done and I've sworn and got angry. The best thing to do is just to go, do you know what? I'm going to just leave that for a second. I'm going to go and do another task, and then I'm going to come back to that, because, otherwise you end up saying the wrong thing and destroying relationships. Relationships in this industry are massively important. And I guess that's sort of coming back around to your first point where you were talking about different types of clients should be treated in slightly different ways, not one treated better than another, but somebody who has experience versus someone that doesn't. I try and give them the treatment that they deserve. If you are newer to it, it's about trying to make it all very relatable to them. Again, I talk to the team a lot and say, don't forget, guys, we talk mortgage every day to each other. This is not something that these people do. I've got a client at the moment. It's not just his first mortgage. It's not just his first bridge. We're doing a bridge to buy a property at auction, and it's the first financial transaction he's ever done. And he's being amazing with it, but we have to really break it down and give all the tiny minutiae so that he can truly understand every single tiny aspect of this, because he's a really clever guy and he will be infinitely better on deal number 2 in terms of his understanding. It's our job, comes back to it again, it's our job to make them successful. How do we make them successful? We increase their knowledge of the transactions as we're going through them as well. And again, you go back to what we were saying before. We chose a particular lender that we knew would deal with that person's scenario. Would it be the same lender that we go to if it was a different scenario? If someone was more experienced or the purchase was slightly different? Maybe not. So we have to pick the right solution for the right person. It's about putting square pegs in square holes as often as we possibly can.
And what you just said there about the challenges that are there, that is why there's more opportunity. That's why there's more opportunity right now. And as we go into 2023, fewer people will be buying these properties. So if you can be one of the people who are buying property as we go into these times, you're going to be able to pick up bargains. So Sam, a lot of our listeners are involved in rent to rent, or they want to get started in rent to rent, and they also would like to start to buy property. Now, I know we have listeners who already have buy-to-let properties, but if somebody's just thinking about starting to move into buying their own portfolio of buy-to-let properties or their first buy-to-let property, what should they be thinking about, first of all, to get ready?
Absolutely. First and foremost, can I just say, as a broker, I shouldn't be saying what I'm about to say, but I'm going to say it anyway. I think rent to rent's great. I really, really do. And you actually said something right at the very top of the conversation, Stephanie, which was rent to rent or property management. And this is what I try and get across to people a lot of the time is rent to rent as a terminology has a certain connotation to it. And the way I prefer to see it is actually you're setting up a property management company. Yeah. And by doing that, you are doing so many great things. Number one, you are setting up a business that will make you cash flow that you can use to invest in property. I mean, it's the standard wealth strategy of the Western world. Make a business and use the profits to buy income generating assets. If you do that long enough, you will be on the Times rich list. It's such a standard pathway that I just have no idea how not enough people know about this. So rent to rent is fantastic for that reason. You get to understand property, you get to understand the running of a portfolio, and you create a fantastic business at the same time. And if you do it right, and you don't just think of it like a stepping stone, and you create a proper business, you are the foundations to become a professional and successful property investor, I think, are great. The negative, I guess, or not a negative, it's not a positive, which isn't necessarily a negative, is that lenders are not going to look at you managing a property portfolio and go, oh, great, you're an experienced landlord. They won't do that, unfortunately. So we are in the situation where you would be a first-time investor or a first-time landlord, first-time buyer and a first-time landlord. And we have to then take that as that's not necessarily going to make the whole process as easy as possible to find your first lender. But they're criteria points, and that's going to be very much on a case-by-case basis. For anyone that wants to go into property investing for the first time, the things that I would be focused in on are, okay, there's some obvious, standard things, which are, credit. make sure your credit's good. You know, at the moment, more than any other time that I've been working in this industry, lenders are looking at credit files and you know, picking things up and making sure, and you know, you've missed a payment 2 years ago, well, now we won't lend. So just, you know, credit files are like breaking your leg. The damage happens quickly, and it takes a while to sort of get it back on track and get it healed. So take time to learn what happens when you do certain things on your credit file. If you have credit, then using it and paying it back on a monthly basis is not necessarily a bad thing. That shows that you're using your credit. You know, the normal stuff, make your payments on time, get on the electoral roll, you know, have lines of credit already, and you'll have a good credit file. So that's a big one for me. The other one is actually understanding, I guess, how you're going to get how you're going to actually look at your first deal. What kind of strategy are you actually going to be looking at? Is it going to be some sort of BRR or a variation thereof? You know, commercial conversions. I've had clients that have done a commercial conversion as their first deal, believe it or not. Are you converting a house to an HMO? You know, what is it you're actually doing? And then understanding the type of finance that you're going to need to actually get into that strategy. So any type of conversion work, we're going to be looking at short term into term if you want to refinance. If you just want to go straight into buy to let because you've got a successful rent to rent business and it's generating you hard cash on a monthly basis, that means you've got a 25% deposit and you just want to buy a property with it, there is nothing wrong with that. Just because you're not doing BRR doesn't mean you're not a great property investor. So there's that too. The big one for me, I think, because I deal primarily with investors, one of the things we come up against quite frequently as a big issue from a criteria perspective, and also just from a processing point of view, is the origin of the funds that you're using to purchase your property with. So this is your deposit. You know, this is your money to cover cost of works if there is going to be works. This is the big one for me. Make it simple and streamlined and do your own due diligence as if you are a bank on that origin of funds. A lot of my clients use investors. We don't say the word angel investor, by the way, because angel means that they're somehow hidden in the background. Our investors are not hidden in the background. We know exactly who they are. We know exactly where their money has come from because we're doing our anti-money laundering checks as investors to make sure that haven't done anything naughty to get that cash. But that's for me a big one at the moment, is wherever you're getting your cash from, make sure that when you are applying for your first bit of finance, that you can clearly demonstrate and transparently demonstrate where that money has come from. If you've sold a property and now you've got cash, you know, we need to be able to see where that cash has come from. If you run a business and you've built that funds up over time, do not be surprised if a lender asks you for 12 months bank statements so they can see that build up of funds for that period of time. So from that perspective, be organized and have all of that kind of stuff ready. Because for me at the moment, that is probably the single thing that is causing delays on applications at the moment. It's being able to demonstrate clearly the legal origin of funds that are being used for deposits, etc.
Yeah, and they can be quite demanding. I was surprised. Because you hear people saying, "Oh, the lender wanted to know my inside leg measurement and what I had for dinner last night," and you think, "Oh, that must be an exaggeration."
But the thing is, it's when it comes to stuff like that, I think people are shocked. They go, "Bloody hell, you know, you're asking for so much." But I go, "But why shouldn't they?" You know, don't forget, number one, they're lending you a lot of money. Number two, it's probably not their money they're lending to you anyway, so they've got to satisfy their funding line. But also, they have a duty of care, whether you're a one-man band lender or whether you are Barclays Bank.
Yeah.
Anti-money laundering regulations in the UK is the same. So they have to go, you know, to the ends of the earth to find the origin. What it is, I can't remember. I don't know the actual, terminology, but it's something along the lines of they have to demonstrate that they have satisfactorily sort of checked that the funds are not from a legal source. So there is some grey area there, but from a lender's perspective, that means, okay, well, we just keep going further, back and back until we feel we can demonstrate, if called upon by the FCA or the AML regulators, to say, do you know that these funds are not from a legal source? And they can actually say, yes, we've demonstrated that we have check that because they said they got it from their, you know, their property management company, Rent to Rent, and they got that money over a 18-month period, and we have seen 18 months worth of bank statements with income coming into that those accounts over that period of time. We've seen that money slowly build up to a point where they've got the 20, 30, 40, 50 grand, whatever it is, sitting in that account, ready to be used for the deposit. And when you actually describe it to a client like that, I think that's when they understand it a little bit more and go, actually, no, that makes a lot of sense, actually. Because, you know, a lot of the time I'll say, can you demonstrate, you know, the origin of the funds to a client? And they'll say, yeah, no, I can send you a savings account statement and all the money's in there. Okay, great. Okay, send it over to me. The account literally has like 3 transactions in it. And it's like one transaction, 120 grand going into the account. Next transaction, you know, paying themselves a little bit of money out of it. And then the next transaction is that money going to their solicitor to be used as a deposit. It's like, well, where does that money come from? Like, you've given me a bank statement, but it doesn't show where that money has come from. And I think, you know, a lot of people are surprised that that's a thing. But when you actually think about it, there's a good reason why lenders do ask you, you know, to supply so much information on that side of things. And, you know, we try and, again, comes all the way back to why choose a certain broker. We try and educate our clients early doors that this is something that's going to be required. So let's get on top of it. Let's get really organized and have that ready, because that just makes the whole process a lot easier.
Yeah, I wasn't specifically referring to the anti-money laundering information that the lenders ask for. I just think even in the normal process, it's a lot of information. So we actually have Google Docs with all the files and folders that, you know, that we need to go across. But what inevitably happens in every single transaction is all of the information is requested. It's all put there and sent across, and then that's the ABC. And then they come back 3 months later and ask for, well, sometimes they ask for ABC again. You say, oh, you've already got that, actually.
Yeah, that for me is the most annoying thing. We've literally had this today. We're trying to complete on a bridge this week, and we've actually had a lender come back and say, oh, we're still waiting on these business bank statements that we requested. Like, we sent them to you last week, mate, when you requested them for the second time. Because this is actually the third time you requested them, and the third time you will have them if you need us to send them to you again.
Yeah,
do you know what? With stuff like that, maybe I'm a little bit more forgiving than other brokers. I kind of look at it as these guys are mega busy, and sometimes there's just human error, oversight. And I'd much rather them ask me for something. I'd much rather that scenario happened than they decide halfway through that they're not going to lend anymore, or they change the rates or the terms or whatever it might be. You know, if there's just a little bit of oversight, oh yeah, of course I've got them. Sorry, Sam. You know, I can just forward I sent you this email last week. Don't you forget? Oh yeah, I did. Brilliant. Thanks. And if you start getting, you know, aggy about it, you're just breaking down your relationship with that person. It's easier just to say, I've already sent this to you, but here it is again. Sometimes that's the best way of doing it.
Yeah, and that's why it's so important. One of the most important roles in property really is having a good broker, so that you can make these transactions, you can complete successfully, and brokers like Sam help you to, you know, be the best you can be as a property investor.
We do our best.
So, and you have a lot to cope with, because we're just doing the transactions, most of us anyway, from time to time. But you...
Yeah, we're doing a lot. Funnily enough, we are doing a lot. So yeah, any stresses that anyone listening to this probably has, go, oh my God, I had that one mortgage last year, but God, that was so difficult. Yeah, imagine trying to do 20 at the same time, or however. Do you know what? I don't even know. I think we've probably got more than that in terms of transactions going on at the moment. So, and everyone has this little, you know, ups and downs and headaches that come along for the ride. So yeah, it's fun. It's firefighting. I always say to people, it's quite apt that my name is Sam, because I have to be Fireman Sam pretty frequently. So you learn to be, especially now I'm in the role of less kind of like hands-on broker, more kind of supervisor, overseer as the owner of the business. I only really get called upon when there's a problem. So I never get the fun stuff anymore. I just get the difficult stuff, which is fine. You know, I'd rather my team deal with the fun stuff and they come to me when there's problems. But yeah, that kind of tends to happen now when you actually run a business, rather than, you know, necessarily doing all the nitty gritty day-to-day stuff.
Yeah, no, that's brilliant. Well, Sam, thank you so much for coming in and giving us your insights on getting ready, preparing yourself, having the right credit score, understanding the property strategy that you're doing, making sure you can provide clarity about the origin of funds, and having all your paperwork up to date. I think those are the key things for new property investors to think about that you told us about today. Is there anything else that you want to talk about today before we close that I haven't asked you about?
I think we will talk about it off air a little bit. I think I mentioned it at the beginning. It's just, I think property is still a fantastic investment. And just because there might be a few dark times, the papers are telling us that, it's all doom and gloom. In every time there is some negativity, there is opportunity there to be had. And I think property hasn't just overnight become a bad investment. I think it's time to be a bit more creative. But it's also time to take action. And if you've sort of decided that you want to be a property investor, now's just as good a time as any. We don't know what's going to happen over the next couple of years. We can't wait. Just let's wait out this recession and then go into it. Take the opportunity now. Find the opportunities. Find the right people to work with, and get on with it. Because otherwise, you'll wake up one day and you're 70 and you'll wish you would have done it sooner.
I love that. Yeah, find the opportunities. The opportunities are out there now. It can be a fabulous time to buy property. I think that's a great way to end the show. I want to thank you, Sam, for joining us even. And do check Sam out. Sam has a very lively, engaging and informative Instagram at the Sam Norris. And you've got one for your company as well at Grand Union Finance.
At Grand Union Finance. So you'll see lots of weird and wonderful stuff on mine. Hopefully, probably more kind of like step by step help on the Grand Union page. But at Grand Union Finance for that. But come along and follow me as well. And if you've got any questions, obviously just send me a direct message, and I will be happy to assist.
Brilliant. So that was Sam Norris from Grand Union Finance, sharing what you need to know as a beginner property investor to help you to get ready for finance. So as Sam said, you can check him out on the Insta at the Sam Norris and DM him if you've got any questions. Thank you so much for joining us again this week. It's always a pleasure to have you with us. And remember, believe bigger, be bolder, be a game changer. See you next week.